Okay, lesson 11, it's a very interesting topic on stock market analysis. So this is very useful for traders and retail investors, maybe like myself, to have a better idea on the predictability of the market in the longer term. I think some of the key indicators in the chart that we need to take note of is like the blue dot represents the stock market, the overall condition. The hour stamp, it's the players, which means the traders, retail investors, institutional investors, those people that is trading in the market. The live door is the profitability in the market itself. So is the market going up, going down? Is there money to be made? And then the case study was on a Dow Jones index, and I think the case there was negative signal, that there is low activity, not many players in the market, potentially the money could be lost and poor profitability. So doesn't point good to how the market is going to evolve. And indeed, I think Marcus shared that quite soon, right, the market did crash, and it kind of validated what the chart was saying. And the key thing to note here is this method, it's good for long-term prediction. So it's not to be used for like within a day, or maybe like within a couple of days, or a week. It's more for like 6 months and above, so you have a general trend on how the market is going. Definitely not recommended to use for things like Bitcoin, which is very volatile. And the other thing in the other case, it's the chart, it's indicating, right, there'll be, like the previous one, loss, there'll be very few players and there's dispute, but there is a positive in terms of the money and the profit indicators. Then the stock market is clashed by this positive energy. So in that sense, like, there is a clash, but it won't wipe out a lot of people. So it might be, well, I think in the stock market sense, it's more like a correction instead of entering the bear market. So I think that is the takeaway for this. So what I notice is, for stock market predictions, or looking at the charts, right, that could be quite obvious signals that, okay, the market is going down. But then we also got to look at the person, the asker, right, to see if the person is able to have some positive influence, or potential positive outcomes, right? Because even in a bad market, some people still make money, and they can make it within a short time frame. So I think that is the key takeaway here.